In today's video, we take a look at everything to do with the stock, crypto, and commodities markets right now in what has been an incredible few weeks of volatility. But wait, it's not about to end anytime soon. There's big earnings results and a key level that we've just reached. Not every day you see levels like this, so make sure to watch. See you soon, everybody. Well, let's begin our market recap here for the 1st of February 2022. And we've got a whole big show here today because there's plenty to go through. And one of those stories is obviously going to be Google's earnings. Yes, it is entering grown-up phase, but realistically, it's entering growth phase. The search giant has just capped its best growth since 2007. And it's setting up to be a very tough guidance to follow in next coming earnings. But there's more because we've got a 20-to-1 stock split. Now, as many of you would know, stock splits tend to have that buy the rumor and potentially sell the fact. Now, just to name a few that have happened here, we had Tesla with the buy the rumor. The stock started and announced it was splitting. It ran hard. Nvidia is another one we've had before that did this. And of course, the infamous Apple. Every single time these two stocks here have split, they've tended to run upwards of even 10 to 20% into the announcement. So the question I have for the community today is, do you think that Google will continue to run into the announcement? Will it be a buy the rumor, sell the fact, as in the split will cause a new high and continuation of a move through the stock? Let us know in the comments down below. And remember to subscribe if you enjoy daily shows talking about stocks, cryptos, and of course commodities. So let's begin our discussion about where we're at in the markets right now. We already know, we put this in yesterday's video, we talked about the idea that small traders were incredibly fearful and still are incredibly fearful in the markets. Now, we follow the idea that we follow technical analysis, and we've seen some amazing bases to obviously be buying investments and scalping and day trading opportunities since the Vix is above 20. But just take a look at that 6.5 billion in premiums, 38% higher number of fearful put bets were being placed than 2020. And that just shows you how much fear has been drummed into the markets. This is where it gets a little bit difficult from the options market to predict what exactly is going to go on next in terms of whether we are in a bit of a bull trap here with a second turnaround. And there is reasons. Let's have a look here at the puts expiring this week from the previous day. So we have here the 420 puts. We know that the market is well far away from those at this stage. Then we had those 460 calls, and in between here, we had a bit of freedom. Now, in the last 24 hours of trade, look how things have changed. Retail continuously puts bearish bets on this market, and this is a bit of a problem. Luckily, they're a little bit lower, so we've got those 440s, 430s, but all of a sudden, all of these have appeared while the bullish bets have not been as severe as in previous sessions. And this is one of the reasons why the market was able to run so well through today's session. There's so much bearish puts in there that need to expire before any dip occurs. Generally speaking, you tend to see expiration or the market run away, everybody to get FOMO back in, and then you see that dip. And remember, in the stock market right now, one of the plans that we have is that we've seen that base, it's here right now, and we kind of expect a double dip or some kind of pullback into recovery later on. And there are a lot of stats pointing towards why that might happen. Let's move over here to the SP500. It's a pretty mixed day in terms of earnings, but actually a lot of what happened was after the earnings itself, because Google sent the Nasdaq up quite a lot more in the after hours trade. Everything was looking okay. Energy was clearly the standout here. And when we take a look at these sectors a little bit later, it'll make sense. But I want to bring in some stats here because everybody is getting carried away with the FOMO right now. So we've still got bearish bets coming into the market for the short term, but we actually are starting to see, and I think Google will be one of these, this huge bullish movement. And I'm still bullish on the markets. I always have been this entire way down. We haven't changed our stance on the medium to long term, but we do know that 2022 is a trading year. The community's talked about that. We all believe this year is going to be up, down, and all around. Midterm elections, inflation, interest rates. Remember, they haven't even happened yet. And we've still got jobs numbers on this Friday. But think about big rallies to end the month. The largest two-day rallies to end a month for the SP500 index from 1950s to current. Now, we're sitting in this illustrious territory. What tends to happen the next month? it's not so good. But it gets a little bit worse when we think about the spillover from a January return. Tends to be where we have a bad January return, we tend to have a mediocrity February return, showing again that idea of a sideways market could be more than just a fallacy or just some kind of pipe dream. Only positive months here, 33% positive returns after a negative January. And that is what we've just seen in these markets. So I think from a technology standpoint, from a growth standpoint, while the earnings are good, and we've argued that actually a lot of the big stocks, the top 10 stocks, have actually not that bad valuations, it does show you that it could still be some sideways action here as we move into the interest rate hikes and we get more clarity on the situation. So January, February, March, we know these are weak months. February in particular does tend to be the weakest month on the Nasdaq. That doesn't mean new lows, but it does mean sideways action is showing up in stats there. And I think one of the positive signs, and definitely come over and follow our Twitter, we're going to be posting this throughout earnings season, is the current beat rate. So we have here Q4 2021 earnings beat data. We're sitting at around 76% beats in terms of 287 versus misses 91. So very good beat data there. And it's also showing that, yes, the fundamentals are in many cases holding with the current stock prices. It's the guidance moving forward where things could get really shaky. Earnings, well, we know AMD came out very nice. PayPal, bit of a disaster. Alphabet, great. Starbucks, not so good. And the rest, you can go and have a look for yourself. But we have big ones still coming. We've got Meta, we've got Qualcomm, we've got Spotify after the close Wednesday. Then we have Amazon, and of course Snap, Pinterest, Activision, all of these large companies coming out with earnings after that. So there's still a lot of big stuff here, still a lot of earnings to go, and we'll continue to follow the guidance on most of these stocks to get a bit of an idea of whether things are hot or not. Everything was buying into the close again, showing Wall Street was firmly in play of this session. The dip happened in the morning, the trap happened, the hour of power, the retail hour, that's where we saw that dip. And then we saw that instant pickup from the stock market. And I would guess this is where all those puts were placed, the puts that we looked at before. Basically, this is where retail will have gotten scared, they will have gone short, and there wasn't enough reasons to do so. And we'll look at that when we look at the technical analysis. Sector-wise, some of the ones that were lagging, like energy, Jets, one of our favorites at the moment, up 2%. Nice to see that finally returning. And XLB, IBB, these biotechnology, and of course, material sectors getting a little bit of improvement over the last two sessions. Technology wasn't really the one driving it, though that was hot aftermarket after Google did such a great report. Let's get into the technical analysis though, and we'll start here with the Vix, the Volatility Index. As we know, if the Vix is above 20, what do we tend to do? You really just need to eliminate swing. If you're new to the channel and you are a swing-based trader and you wonder why you get cut up all the time during volatile markets, it's because when the market is volatile, it is not as technical. It doesn't have that beautiful ebb and flow on the larger time frames. Ebbs and flows like this is a great time to swing. That's usually when the VIX is under 20. And the great news for you is it usually is. But when it's over 20, day trade, scalp, and of course, find investment levels that you're looking for in the stocks and indices and sectors that you want to trade the most. Move over to the dollar index. The dollar index actually moving around. So it's actually dropping here. And it initially hyped quite a lot after the Fed statement, after this idea that we might see more rate hikes. And then all of a sudden it's come back down. And this is one of the things that I'm pretty surprised about, that the DXY is turning around so much. Don't lose faith in the DXY being still a very strong currency. It's just kind of repricing itself, and probably a lot of people went bullish on it. So I'd say it's going to consolidate here for a little while. In terms of our bigger, longer term indicators that the market's all looking great and peachy, the 2-year is still very high. So 1.17, it's not exactly where we want to be with the 2-year. It hasn't started dropping yet, and this could still show us that there's a lot of volatility in the markets. And this comes in again with the 10-year as well, jumping back up to 1.8%. It's not like inflation or interest rates have gone away. It's just the market is ignoring that for now until it becomes again a reality. So remember, the ebbs and flows of a market. The stats say February could be a bit wild, but again, at this stage, we're seeing fairly strong price action, and we'll talk about that soon. Gold holding the base for now, went up to 1808, came straight back down. It's not that interesting in terms of the trading here on gold. If you look at the 2 hour, the little inverse head and shoulders, I guess, playing out as we speak, it's on the neckline at this stage. And if you like gold, this is the kind of level that many people will try to go bullish on it. And of course, it is in play at this stage. We'll find out whether it can hold it up. MACD's also switched on these timeframes, etc. But let's get into the stock markets before we do the indices and the cryptos. Let's talk about some of these stocks. You'll notice the post here, 20-to-1 split. Yeah, Google is about to go to a new all-time peak. If not, it's already there. What's the 52-week high? 30,037. So it certainly could do it in the next session. Big jump here, 9.15%. I've been on the Twitters and I can say that people are incredibly bullish into the stock split. Kind of has me worried how fast it'll reprice, but people are going crazy. Call options opened, retail traders all over this one right now, trying to get into that buy the rumor, sell the fact. Is it the first time it isn't going to work? Well, we'll let the comment section decide that one today. Move over to Tesla here, and you'll notice it was lacking. It didn't really move that much through the session, and this is tending to be what Tesla does. It has that one explosive day, and then just takes a breather. Just, you know, chill back and wait for more information. And the thing with Tesla at this stage is that we know we've got a couple of problems. We know that we have that 1,000 barrier. That's the big barrier here for the bulls and the bears. And there's a lot of fighting to be done here, not only because there's a bit of a trend line. Let's just fix that for everyone now. Not only because there's a bit of a trend line in its way, but you've also got some significant moving averages. 200 simple moving average on the 4 hour, the 50 exponential, the 20 exponential, which has held it down a few times. That's why it's struggling. It's still a great day trader stock. If you see the right breakouts and the right structure, you'd be remiss not to trade it. I think many people here on the channel that didn't have FOMO, I know there's a few out there, did incredibly well from picking up the trend line here and possibly even picking up the 800 support that day it broke through and then quickly rebounded back up. So Tesla's a great day trade stock when you find the right setups, and it's at the resistance. So it's again another one that you'd want to go in, watch the first few hours of trade, find the break. If there is a break, potentially be involved, and we'll cover that in the next couple of sessions. RK, is the sell-off over? A lot of people are asking this question. Yeah, Kathy Wood's fund is looking better, but with the 20 moving average on the daily has held it down once, twice, 3 times. Will it be again? So these rallies here that are coming in, are they actually just all going to go here and then we'll see that dip? In yesterday's video, we talked about this idea that there could be a little bit of a bull trap here, grabbing people in on this massive resurgence and then a little bit of a dip. And that might hurt people that are leveraged, not investors, because of course they're very happy with the lows they just got and the 20, 30% gains that they potentially have in stocks. But let's just think about this. Huge volumes coming through RK, massive transaction volumes going through, a good sign of a bit of an accumulation base, even bigger than last time. So people are starting to place these bets. At the start of 2022, we talked about this is probably one of the sectors, the hypergrowth sector and biotech and possibly even healthcare, that are going to be some of the best sectors once they turn around. And yes, the first stage you would think is in. Double bottom, you can see that bullish hammer that's coming off here. And while it might struggle a little bit, this is certainly making a case for the first time it's really looked bullish in all of this decline. This is the first really start of something bullish with some serious volume. And I'm excited for what hyper stocks can do, because when we think about it, not that we necessarily go back to the peaks, but even getting back to where we were in November, from here, you're talking about a 64% gain. That's significant in anyone's books, and that's just happening on RK. Imagine some of the stocks underneath it. We'll move over to IWM, another index or indice that is really looking a little bit weak still. We've talked about the Wyckoff, which is this distribution, the false break, and then of course the break on down. It's starting to recover, but we've got problems. 20 moving average, again, another big issue that's going to be hit here by the markets, and this previous support becoming resistance. So I don't think we can lose sight of the fact that while these pickups are fantastic, and it's exactly what we'd hoped at around the same price, that 50 exponential on the weekly, SP500, exactly where we'd hoped it went to, we still don't want to be remiss if we're looking at day trades and saying, well, it's bull, 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 let's keep buying, take leverage, all this type of stuff, when you're coming into the face of these problems. And I think that's one of the big things that we're going to have an issue with here in the markets. Big volume, we know, big amount of fear, huge amount of puts in the markets, but we're starting to reach these key critical resistances. We talked about the Nasdaq hitting the 15,000 as of this time of recording. It's almost at our second level, which is 15.2. So 15,000, certainly the first level that we wanted to watch for a turnaround. And when we talk about turnaround and going bearish and all of those types of things, it doesn't mean that you just find a level and you say, sell, 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 let's sell that level. You might start taking profit there, sure. Scaling is something that we talk about a lot on the channel. But on top of that, what we want to be doing is waiting for turnaround stories. So looking at the smaller time frames and waiting for that turn story. And let's go into like a 15-minute chart here and have a look at what the actual charts were telling us about the session, because a lot of people sold early. So it hit around here and it sold off. Now, it never formed a lightning bolt, a peak, a trough, a lower peak, a lower trough. It never formed any real reason to get out of your bull. It continued to hold the 15-minute 20 moving average and everything was really good. So these are the types of things that you'd be looking for. If you believe, let's say it's up here around now and it comes down, does this, comes down, and the 20 moving average is here and it breaches through it, that's a more significant reason to day trade towards the short. If you see a whole bunch of shooting star tweezer candles, any of these types of reasons, whatever your system might be in this zone, this becomes a very bearable zone. As in, if you were bullish, you could turn bearish in here, maybe look for those things, but only do it when the market tells you to do so. I think that's a big difference between sometimes a beginner and a more, I guess, advanced trader, waiting for the market to show you that it's ready to turn around. If we've got any experienced traders here, let us know in the comments down below. Guys, go read the comments. Give some of the people in the community a bit of feedback on whether you do that now and you used to not, and whether that was a big mistake in your trades. Because I think it's all about everybody learning to improve themselves, and that's one of the things that definitely changed the game for me, and I think it's changed the game for a lot of people. So we talked about the SPY, we talked about all of the calls that have been sitting around that 450 to 460 this week, but we also talked about these short puts that for some reason people keep going buy put, buy put. They all expect the bull trap. A few comments in the section yesterday said, oh, well, if everyone expects it, it can't happen. Yeah, you're right. That is true. It doesn't tend to happen when everyone is expecting or doing a particular thing. But there are some signs that, again, the weakness could be here. And this is just to do with the current price action. So we saw the 20 moving average there on the weekly. And then if we come back and we just think about things logically, between this 455 and 460 zone, what do we have? We have previous supports, and we also have that previous resistance over here. So we basically create a green zone or area of interest for us to potentially look for shorts. Now, we're only looking, we don't have any clarity that that's going to be exactly where it is. Why? Because it's also fibbing kind of pullbacks. It's one of those last fights for the bears towards them being successful or not. You'll notice here at around that 456, we're hitting a 61.8 fib of the full pullback. So that's how fast it's moving. But I think there's more than that. And it all comes down to where we started going bullish this week, which actually was just a day ago. And it all comes down to this 2-hour candle. So we liked what we were seeing on the base. Obviously, bullish bets could have been placed here as well. But when it breached here, we basically created a base formation. Now, a lot of people will take that distance and they will extrapolate that distance out and they'll say, okay, that's where I think the market's going. And it basically goes straight into around 460 on the SPY. So it's a very classic case of that's where the pattern kind of finishes. That's where we have previous support that could act as resistance. That's where we have a huge amount of calls that are open. The Wall Street would not like to pay those calls off. And we suck enough people in for short dated puts that are sitting all over these levels trying to go negative, trying to make money. Because one thing about puts is they're super expensive. Wall Street hates paying them off. And if they can keep pushing up, even if there's a dip coming into the end of the week, guess what? None of these expire in the money. They all expire worthless. And that's a very important factor. So the SPX or the SPY are looking pretty okay here. They're obviously still bullish at this stage, but the turnaround, we're in the zone, just like we reported on 24 hours ago. It's exactly what we expected for it to occur. We also do have the pivots open as well, and this makes sense because we have the central pivots sitting around this 4600 area or 460 on the SPY. We've got the S1. Look at where the S1 opened. It opened right on the low, 4220. Opened right on that low. The central pivots here, and look where the R1 is, right on the previous peaks. So it's pretty crazy. We have some big resistances and supports from the pivots. We're at the central, which is where, again, you expect that kind of maybe resistance hit from another indicator as well. And a lot of things are pointing towards that. For investors, is it time to panic? Absolutely not. It's one of those times where you think, okay, yes, there could be some downside, but the fundamentals, the earnings, even the guidance at this stage are looking good, and those numbers prove it. The earnings results are really good so far. Let's move over to BTC. Let's talk about the crypto markets. They're coming down, and they're continuing to rally, I guess, as much as they can with the Nasdaq. But you know the problem with Bitcoin? The 20 exponential moving average on the daily. We talk about mean reversion all the time. It hit the level, and it hit our trend line, and guess what? It just sold off. It just sat there and just went, okay, cool, we'll create a long leg doji. Well, that's no fun. Who likes long leg dojis? We've got the high, we've got the low, we've got the open, the close. Sucks, doesn't it? So this is disappointing to say the least. When we have these types of candles here, the market's literally saying, oh, we have no idea what we're doing either. And I don't like that. And I don't think many of you guys would like that either. So we look for a closure above to show some strength coming back into the crypto market, proper strength that is. And of course, at this stage, it's still technically in a bearish downtrend. And all of this, for many people, looks like some kind of giant flag pattern or some kind of bearish signal. It hasn't proven that it's doing that yet, but it's certainly just grinding higher and not doing much. Let's move over to ETH, because Ethereum's been a little bit better here. We had those higher lows. We thought this one might be the strongest out of the last 24 hours. It's done okay. It's moved up a little bit here. 3,000, clearly a support equals resistance area. And it is still looking bullish at this stage, but the problem is Bitcoin. And that's basically the SP 500 of crypto. If it's showing a long leg doji and it breaks below that long leg doji, it's going to be sad faces, because that's going to probably push further weakness in the market. Ethereum at this stage still looks really good on the charts. There's nothing really much to be concerned about, but that's the problem. We've hit 20 exponential moving average here as well. We know that's held it down before several times. Will it continue to do so? I think a lot of this is up to just whether the bulls are prepared to get back into the markets. BTC shorts still declining. This just shows again that realistically the big traders, the big whales, they've started placing some bullish bets back in the market after flushing out many weak hands, you would think, in the Bitcoin markets. So it's looking better, but not right there just yet. When we look ahead at the week in terms of the big announcements, let's just quickly bring up the February here, and we'll go into the February week. We do have some big bits of information. Obviously, Friday, non-farm employment change. That's going to be a massive thing. We've also got on Thursday, 10 a.m. New York time, ISM PMI. We scroll back, we get the ADP non-employment change. Now, this number, it might move the market this time, but this one is actually a non-event. So in general, it's wrong. I don't like this bit of result, and I would say that Wednesday one is completely pointless. OPEC meetings, you know what that is for oil traders. That's going to be pretty risky. And of course, ISM manufacturing PMI and the JOLTS job openings, 10 a.m., which has already occurred. So all of these things here are pointing towards some positivity, but really it's the Wednesday OPEC meetings that are probably going to be big for oil. And I think it all comes down to one number, and that is here, the jobs number on Friday. That's where everything comes down to. And hopefully we see some volatility and we see some tradable action around those times. Thank you so much for watching the video. If you enjoyed today's video, please remember to subscribe and of course, smash that like button. It does help us out. Let us know in the comments down below as well, the answers to our questions. Let's find out. Does the stock split lead to a big gain here? You can even put your predictions. I'd be very interested to watch it. And I'm sure many people in the community would love to read those comments. See you soon. Bye for now.